think we actually have a really interesting backdrop right now. Traditionally, as a fixed income investor, I'm looking at those markets. And right now, we're in a trading range for the 10-year Treasury. And we've been in it for almost 2 years now. And I think it's going to continue. Risk assets, while priced for perfection, particularly in U.S. equities, I think there's still opportunity to go. I would make an observation that what's happened in U.S. equities is that with the enthusiasm post-election, we've pulled forward some of the return opportunity, but volatility is very low. And I think this is going to continue to be an outperforming equity market. Let's flip to fixed income. It's a very solid credit market. I mean, we've had, economic resiliency in the U.S. We have very strong fundamentals in credit. And I still think that there's quite a bit of positive market sentiment that's going to continue to carry us through into 2025.
Okay, so as you look at the fixed income space, give me some actionable investment ideas for the year ahead.
Sure. So let's talk about rates. As rates have been in this trading range I just referenced, so on the high end, probably about 4.5%, and on the low end, about 3.5%. There's a couple of reasons that I think that the range is cut down to those levels. One, there's still a lot of fiscal spending in the U.S. We have a lot of treasuries to issue. I think it puts a floor under the treasury rate. On the other end, I think because the Fed is in, for the most part, in easing mode right now, and we can talk about where we think we're going with regard to their rate activity, that's really going to cut the top off of the range, in our view. You can extend duration when the rates get higher in the range, and you can shorten duration when we get shorter. The other element is, even though spreads are tight in fixed income, there are really good places. Corporate credit, structured credit. We hear a lot in the backdrop about private credit opportunities. Those continue to be strong. And additionally, real assets. When rates are starting to fall, this is a good time for real estate and infrastructure investments at this time as well.